Hey guys, what's up? HODL here. Welcome to episode 38 of the weekly market outlook with TradeX Pro. Now, in this episode, I'll be covering the DXY, gold, S&P 500, and also Bitcoin. So if you have any other asset classes you want me to cover, just leave a comment down below and I'll get straight to it in the next outlook. But if you want more of like a personal way of communication, you can also reach out to us on our free Discord channel. Link is in the description below. All right, so now let's take a look at the DXY. So I am pretty much mixed on the dollar for a few reasons, right? Because we have bullish reasons and we also have bearish reasons, right? Bullish reasons pretty much include things like, we're seeing tariff threats, especially with Canada, and that comes with a risk premium, which makes this a kind of like a safe haven play. We all know that the DXY or the dollar is pretty much a safe haven play across many different countries, right? Many people or banks or countries globally, they kind of see the dollar as a safe haven, and similar to kind of like gold in that sense. But at the same time, gold is a commodity. It's more so a pretty much a safe haven play, right? But the dollar is pretty much also a safe haven. We have currencies that act as safe havens as well. Things like the Swiss franc, the Japanese yen, and the DXY is one of them. Right, so with all of these uncertainties, across the tariffs, it makes it kind of stable, right? Investors love stable plays in times of economic uncertainty, and right now we are living in that state, right? And not only is it a safe haven play, but if you look at the data, right, the econ data, comparatively to maybe say Europe or the UK. It is pretty strong, right? And this strength could support a bounce in the DXY because it's going to be drawing more capital, right? Of course, we are mixed, right? I am mixed at least, because while we have all those reasons for it being a bullish play, we also do have the Fed actually expecting 2 rate cuts for the year, which will weaken a currency's yield edge. Okay, whenever we see rate cuts, currencies often tend to see a drop and they don't perform well. Okay, of course, that is something that we will have to look at, coming into the end of March, right? So quarter one is going to end next week, and we are going to see the start of a new quarter. Okay, so definitely still waiting for some more data to come out. I know we're seeing the euro and the pound. If I just pull up some of the charts real quick, maybe, but I think let's just stick with the DXY, right? Let's just stick with the DXY. Definitely with the euro and pound, we are going to be seeing some bullishness, right, coming from tighter ECB or Bank of England policies. They are at the moment, outpacing the Fed cuts, which are attracting flows, and strong Eurozone as well as UK data is at the moment, outshining the DXY. But come on, the DXY has been, been on a bull run for such a, long time, since like end of last year. Really, we bottomed here in September, and we're seeing just massive push higher, and now we're seeing a pullback from weak data and just other countries outshining the data, right? But at that time, this was pretty much this period of time during the end of the year last year, or at least the last quarter, we saw really strong US data, right? But right now, I think we're just seeing a slight pullback. As long as we don't take out and break beneath this strong level right here, I don't think we are going to be seeing a bearish dollar. But that at the same time means we are going to be breaking beneath the $100 mark, 100 price mark for the DXY. But coming down to the weekly, let's take a look at the technicals, right? Because we know we're pretty much mixed. We're coming to the end of the month and end of the quarter as well, so we want to kind of reevaluate our data as we edge towards the new quarter. Okay, but looking at the weekly right here, what happened last week after we saw this this previous month's low being taken right here is that we formed another take, right? We took out this previous month's low, and then we took that low out again. Okay, so we closed pretty bullish in terms of the formation of the candlestick. So I think next week there is a tendency, or at least a potential, for us to respect the previous week's low and continue back within the monthly range, right? The monthly opened over here, and I think we're going to be heading up into filling some of this, some people call it a gap, but some of this imbalance right here. Pretty much we had this large candlestick, and now we're pulling it back to fill some of it, right? With the furthest target being 106. Okay, that's what the price chart is telling me. Of course, if we do deeper, these weekly lows right here are your next targets at around 102. So if we do get some daily shift in structure to go lower, we definitely could see lower prices. But going down to the daily, of course, what are we seeing, right? We're seeing that previous month's low being taken, we're seeing that weekly low being taken, and we're seeing a large push move higher, right? So if we do see this break with momentum next week, definitely some of these targets, or something we've been here on like the 4 hour, the 1 hour maybe, can be your targets. So next week I'm expecting a open low high close. We could take out this daily low, or we could just take out Monday's low on Tuesday and then just go higher. I'm not expecting us to retrace all the way down to take out this weekly low right here, or even come close to it. Really, I'm expecting a shallow wick and then a continuation higher, right? That's what I'm expecting for the dollar, in form of a retracement, at least, to kind of cover this large bearish move lower as well. Okay, so that is what I'm looking at for the DXY. Now let's take a look at the S&P 500. Oh wait, before we go into that, let's take a look at the news next week. So we have USD news on Monday, on Thursday, as well as Friday. We have core PCE on Friday. We have Monday. We have PMI. So we have quite a bit of news releases throughout the week: Monday, Thursday, and Friday, right? So do expect some momentum coming in during those days, and we will review the data when we come straight to it in the next forecast. All right, once they release. Okay, so heading back to the charts right here, let's take a look at the S&P 500. That is a very messy chart. Wow, I think I need to hide off this because this is the monthly chart. All right, better. This one is also technically, that one's a monthly level, but also weekly. Okay, so let's take a look at what the equities are showing. Since we know we're pretty much mixed on the dollar, what about the equities, right? So well, we did say that we were expecting 2 rate cuts in this year, right? The Fed did project 2 rate cuts this year, and essentially when you see rate cuts, the dollar kind of decreases in value a bit, and that kind of makes us overall lower borrowing costs for companies, and that is going to boost profits, right? Which could lift potential growth stocks in the Nasdaq and large caps right here in the S&P, as well as the Dow Jones. Of course, this strong econ growth outlook is also supported by earnings and will support earnings, which is obviously a key driver for these indices. Some people, they tend to forget that the indices are basically just a basket of shares, and what drives them is also share price and stock valuations. But of course, the same thing with dollar. Uncertainty is not a friend for stocks and equities, right? So that kind of leans into the bearish scenarios, right? We are seeing tariff uncertainty with Canada. So, supply chains are being threatened, which if you don't know, when you see supply chains being threatened, big firms and even the small caps in the Russell, they are likely to see lower stock valuations from the increased costs, which means that they are all also sensitive to rate shifts. Of course, the Russell, being small cap stocks, they are likely to be hit more because most of the companies there rely on debt financing. All right, so when we see uncertainty in the market, the Russell is going to be hit very hard, and the big cap stocks are likely to see more of a stable movement, or by it being a bearish stable movement. Okay, but of course, that's the tariffs. We are also seeing econ data, or just the Fed being cautious, which erodes consumer confidence, right? So I'll be looking forward to the next wave or the next round of data release for the CB consumer confidence to hit, just to kind of gauge what the market is thinking about the strength of the US economy. Okay, so pretty much mixed as well on the indexes, right? We are mixed all around. We could definitely, looking at the price chart, we could expect some form of a pullback, seeing just how crazy strong we are, and we have been for the last year or so. I think last year the S&P averaged in around 20%, or roughly around that figure. Don't quote me on it though. So I'm curious to see if we could give some of that back this year. Okay, so currently the monthly candle hasn't closed, it's closing in 1 week, but we have displaced tremendously through all of these monthly lows. We could see it hold above these two, but at the moment we have displaced crazily through this previous monthly low. I don't think we're gonna reach up in like 1 week to cover it, so we could definitely see a big body passing through, and that leaves space for what? For a potential open high low close the next month if that does set up. Okay, but for now let's go on to the weekly, and yeah, the same thing. Weekly lows been taken. This is the last one within that bunch. If I just go back to the monthly, this is that last one in that bunch. Go down to the weekly. Yeah, this is that same level. Okay, so last week we closed as an inside bar. We didn't breach either of the ranges right here. Previous week's high is here and previous week's low is here. We did form, of course, a swing low, right? We don't have anything on the daily right here, sorry, on the weekly that we have seen as respect, but we did come into something within its body right here, and then we're seeing that swing low and that retracement being formed. But of course, without looking at all these concepts, you do realize that the S&P dropped a tremendous amount, right? For the past 4 weeks or so, we have seen this large drop at the top. Okay, so it wouldn't be weird for us to stagnate a bit or even have a pullback before potentially continuing lower. Of course, that it's going to be I'll be waiting to see if that happens, but as of now, this inside bar could potentially showcase to us that we are going to be seeing some retracement or maybe just a sideways market for now. Seeing as we formed a swing low, the market has a higher potential to reverse higher. As you can see, we have a swing low, and then reverse. Obviously, it's not always the case, right? We had this swing low, and the market reversed a bit, and then we just tanked, right? So it's not going to be saying that the markets will reverse from here, but at least just based off of the nature of candlesticks, it could potentially reverse. Okay, so going down onto the daily, that was the drawing just now, my apologies, right? So going down to the daily, we can see that we are stagnating right here in this short range. So for next week, what I'm expecting us to do is obviously a move higher to cover up the range pretty much, right? We obviously know that the month started right around here. This is the monthly open. We had this big displacement lower. So seeing how the weekly formed a swing low, and then the daily did as well, and we're seeing a push move higher. For next week, I want to see an open low high close. Obviously, where could the low come into? We could potentially take out previous week's low, seeing as we have stacked some of these relatively equal lows right here. So we could see price grab something down here and then push higher. Of course, if we do push higher first, that then sets the stage for a potential bearish week, or even just a doji candle, a bearish move once we take out previous week's high, or some of these daily highs right here being taken out, we could see this move lower. Now I'm not expecting us to gravitate straight into the monthly level right here, right? But we could definitely take out some of these highs and then shot back down, because we are in the last week of the month and the quarter, and normally the last week doesn't really do much for the entire monthly or weekly range anyway. Okay, so with that in mind, ideally I want us to do an open low high close. Some levels would be here ideally, but we could also come into this long ass wick. There's something in between here on low time frames, and we could see that shift higher. Okay, so wait for some confirmations would be ideal before we tend to look into longing it. I want a move lower first, right? If it goes, it goes, sure, whatever, I won't get involved. But if it goes lower than higher, that would be the ideal play for me next week. Okay, so that is it for the S&P 500. Let's take a look at gold. So gold is just not doing anything for anyone right now. If you trade pullbacks, we did see 2 monthly candles here that were bearish in the form of pullback, and then we just shot up higher, whatever, right? So we breached 3,000, hooray, right? Not hooray for those that want to buy engagement rings in gold or just buy gold jewelry in general, but for those that bought paper gold or that are invested in digital gold, congratulations, we have breached the $3,000 per ounce mark. Okay, so this was actually the target. If you watch back the previous few outlooks, I did kind of say that 3,000 would be something I want the market to hit before the end of Q1. I think I even posted on LinkedIn that I wanted to see that happen, and we did reach it. So I'm kind of glad that we saw the targets being met. But in terms of the technicals, it's not really giving me any signs or signals. Let me just clean this real quick. It's not giving me any signs of entry apart from, of course, intraday plays. But if you're trading off of like high time frame levels, it's not really giving us any entries, right? This strong move higher is pretty much because of uncertainty. I think that the markets are scared of tariffs, right? They're scared of inflation right now. We're seeing kind of like a stagflation effect in the US, right? We're seeing GDP slow a bit, but we're seeing inflation increase a bit. So that kind of just pushes people to put money into these stores of values, especially for metals like gold, sometimes silver, but mainly gold. Silver kind of moves a lot more comparatively in terms of percentages compared to gold, but gold is still pretty much the OG store of value, right? It's a safe haven demand, safe haven demand asset, and if we keep seeing weak econ data and inflation, even if moderated, it pretty much keeps gold relevant as a potential hedge, right? What is also propping it higher is just overall strong institutional buying. You can see the COT data. We are seeing just confidence in bullish gold signals. Okay, so definitely still bullish on gold right now in the short term. I'm always bullish on gold, long term perma bull gold, but in the short term I am also still bullish. Okay, so looking at the weekly candle, just strong bullish. There's no signs of slowing down. We closed quite convincingly above the previous weekly candle, and now we are in this weekly range. Okay, this is the previous all-time highs that we took some time to break. So if you want to be looking at potential longs, I would prefer some pullback if you are looking to swing this. But of course, when you're trading gold at all-time highs, it's always a tricky thing because you are now in an area of price discovery. Okay, I think this is when trading with like indicators or oscillators or divergences or just relative market strength with the overall markets, with other markets, is a good thing because you want to track the money outflow or inflow with certain asset classes, right? Because there's no price point. There's nothing on the left, there's nothing here to base your trade ideas off of, right? It's purely just the price levels and how the market reacts to these price points, right? So right now, going down to the daily, we are seeing mixed reactions. Obviously still bullish, right? We did see some slight sell-off on Thursday and Friday, but we also did just reject off of these lows and highs with a strong wick pushing to the upside, and we failed to close beneath them. Yes, the body is pretty big, but if you look at the ratio, it's pretty even, 50-50. So for next week, I'm still expecting a potential move higher. Of course, we could open right here. Since we're so close to this Friday high, we could open, take it, and then push lower and then push higher, right? So that's something I'll be expecting. Monday likely would reverse this range right here to go higher. But overall, if we do just break this and we just tank, the first target would be around Friday's low for us to see a reversal. Or if you got into these shorts right here, you could target Friday's low or some of these daily lows right here, including the previous all-time highs. But ideally, for swing positions, for long gold, I want to see price reach into the price point of 2982 and 2956 on the Awenda data feed, right, before seeing price continuing higher. Okay, we did form a swing high, but as I said, this is gold. Do not mess around with gold. I am unable to call tops and bottoms. I know some people are. I am personally not that kind of person. Okay, so that's pretty much it for gold. Let's take a look at Bitcoin. Last but not least, going to the monthly. Let's take a look at what happened. Let me just remove this real quick. This one as well. I don't know why it kind of messes up with the drawings, but I'm pretty sure I edited this and removed them already. Alright, so Bitcoin, ideally I want price to come into this area of range right here, or at least area of accumulation, whatever. There's something down here that I want price to reach before going higher to reach the 100k mark or the 110 mark, right? There isn't a valid reason, I'd say, for now for crypto to just shoot up. Okay, I think price could definitely do a deeper pullback before continuing higher. Obviously, we did see the Ripple news release, which was good for crypto overall. That's great, but I still do think that in the short run, we would need to see some move lower. Okay, so here we just took up previous month's low, and then we are starting to see a shift higher, probably just to cover something within this large move and drive lower. Okay, so previous month's low right here, took it, formed a swing low, but now we are failing to close above the previous week's high. Okay, or at least a week before that. So with this in mind, this weekly candle is still open, obviously, because it is the weekend and crypto is open 24/7. So I am waiting to see how we close by the end of the day. Obviously, since it is the weekend, there's not much volume being traded, since the big players are not trading during the weekends. But depending how we close it, if we close beneath this weekly level, it kind of showcases to me, at least, that we could have came up with something right here, and we might see a potential open high-low close next week, forming that weekly swing high, continuing down into this monthly low, and some of the levels right down here, right back within this 73 range is definitely possible. Okay, going down to the daily, of course, we're seeing that same thing, that strong push higher that looked convincing, but then the next one just closed beneath it, and then just kind of like made this idea that was bullish completely invalidated. Okay, so some of you say maybe you come up with this gap, whatever. We did come up with something right here, which in turn showed weakness. Okay, and now we're just ranging. So with this in mind, depending on how we close, right, again, if we close beneath this, I want to see these highs being run out and then run lower. Okay, but if we close above it, then it's a potentially different thing. Alright, so still, these targets, depending on how we close, if we run out these highs, these are great targets for next week. If we close above the weekly, I would like some pullback into that previous high, and then taking out the previous weekly high, and then ultimately closing above here, and then these highs right here as well. Okay, but that's pretty much all for now. Yeah, I covered 4 asset classes, took a bit longer because I decided to just dive deeper into the technicals a bit. But yeah, for now, I think that's pretty much it. I'll see you guys next week. Take care. Don't blow your accounts. See ya.